Alright, let's talk about this new heat map that's blowing up on Reddit. It shows how much detached home prices have changed across the GTA, comparing August 2025 to the February 2022 peak. And let's just say the map looks like someone spilled hot sauce over the GTA. Toronto's numbers look less scary, but still pretty shocking, yet not surprising. So here's what I'll do. First, break down the infographic that shows what it actually means. And second, the part you probably came for, I'm gonna pull up actual sales from August 2025 and compare them to what similar homes sold for back at the 2022 peak. I'll cover Toronto, Whitby, Markham, Oakville, and if you want to see other cities, just write them in the comments and I'll make a video on that just for you. We'll see if the data holds up or if the map is printing an exaggerated picture, because the goal here isn't actually about understanding the past real estate markets. It's actually about not getting screwed in today's market. The Reddit post showed Toronto's median detached home price dropping from about 1.675 million at the peak to just under 1.18 million today. And the days on market went from 9 days in 2022 to 30 days right now. That's a massive difference in how long it takes to sell. So let's start with Toronto. In the Willowdale East community of North York, here's the first example. A custom 4+1 bed, 6 bath, detached 2-story on a 45 by 120 foot lot with a finished walk-up basement and bar, sold in May 2022 for 3.4 million after listing it for 3.1. Fast forward to summer 2025, another custom 4+1 bed, 6 bath home, roughly 3,500 to 5,000 square feet on a 50 foot by 146 lot with sub-zero wolf kitchen, home automation, and a walkout lower level, sold in early July 2025 for 2.8 million after 36 days on the market. From 3.4 to 2.8 is a $600,000 drop, call it roughly 17.7%, down from the peak on a very similar home in the same pocket. This doesn't line up with the map's claim here, where it says prices in Toronto fell by 29.6%, but the increase in the number of days on market is pretty accurate. The house in 2022 took only 8 days to sell, while the one this year took 36 days, almost 5 times as long. And by the way, the infographic itself was created by doorinsight.com, linked in the comment section for those who want a copy of it. It's actually a pretty nifty site. It tracks housing data across the GTA and packages it into easy to read visuals and calculators. It's pretty useful if you're looking at comparing home prices and seeing all kinds of housing reports. Some of the comments were interesting. One person said that this really isn't as bad as I thought. The peak was a joke. It was way off reality. The 2022 peak was one of a kind. There was cheap money from the banks, FOMO because everyone was talking about wealth opportunities from buying property, and bidding wars were out of control. But another person brought up something important. I assume the figures are nominal, not including inflation. And that's kind of a great point, because when you adjust for inflation, the real drop is even bigger. So let's keep both ideas in mind as we keep going. Because if you're one of many people out there who've been scrolling listings for weeks and nothing ever makes sense anymore, you're not alone. Someone in the comments said, I do wonder how closely the change in median follows actual price change, which is a great call out because median prices summarize the middle sale of an entire area, but it doesn't track properties in specific communities that are similar to one another. That's why in this video, I'm sprinkling in repeat style comparisons. Same street, same home type, similar condition, so that we're not fooled by sales mix. So now let's pivot to a more typical detached home in the West End in Mimico. I'll use 2 sales on the same street. First, the peak period sale in 2022. This is a renovated 2+1 bed bungalow on a 33 by 125 foot lot with a finished basement and a detached garage. It used the classic underlist strategy, listed at 1.199 and sold for 1.408 in March 2022. 6 days on market and roughly 17% over the list price. That's exactly how a lot of homes traded at the peak. Now compare it to 2025. This is also a detached bungalow with a finished renovated lower level, adding a 3rd bedroom plus a private drive and detached garage. It's on a similar lot, 32 by 125. It sold in 2025 for $970,000 and took 50 days to sell. From 1.408 in 2022 to 970 in 2025 is a $438,000 price drop, which is about 31.1% down from the 2022 peak for very similar homes in the same pocket. That's almost spot on with the infographic of 29 29.6% decline for Toronto's detached segment. And if you don't know this next bit, you could waste thousands on the wrong offer strategy. In 2022, you listed on a Friday, held offers on a Tuesday, and that was it. Sold in a week. But now in 2025, the same kind of house can sit for a month or two, just like the house that we looked at. Price cuts are normal and happening more frequently, and this is why the days on market stat matters, because it measures not just price, but power. Buyers have more of it now. The Toronto housing market for detached homes shifted from about 9 days at the peak to roughly 30 days now. That's a whole different pace. Also, someone asked, compare it to 2019 prices, what does it look like? That's a great question, and I'll show a 2019 baseline later so you see the full arc, not just from peak to now. I'm jumping ahead to the east now. Let's get specific with the Brooklin community in Whitby, using these two homes on the same street. During the peak period around March 2022, this property sold. It's a detached 2-story, 4-bed, 3-bath home, roughly 2,000 square feet on a 29 by 111 foot lot. Interior was freshly updated with quartz counters, new broadloom in the primary, 5-piece ensuite, breakfast nook, gas fireplace. Listed at $999, sold in 1 day and closed about a month later, right at the market peak when typical mortgage rates hovered near 2% and under list strategies were common. It sold for $1.3 million, reflecting a premium for the freshly updated condition despite an unfinished basement. In the summer of 2025, we saw a similar listing sold. This is also a detached 2-story home, 4-bed, 3-bath on the same quiet crescent in Brooklyn, set on a large pie-shaped lot with deck and fully fenced yard. It sold for $999,000 in 2025. There were multiple listing attempts earlier in the season, so while the final successful listing moved in about 11 days, the total exposure was roughly 59 days. A good snapshot of today's slower cadence versus 2022. So the difference between 1.3 and 999 is $301,000, or roughly 23.2%. Comparing to the heat map from doorinsight.com, the Whitby detached figure shows a drop of 30.7%. Our same street example is shallower at 23%, but the tempo shift is on point. 1 day at the peak versus 59 days of exposure now. Someone made a comment about how the East End got absolutely hammered. That feels blunt, but the comps do show a steep give back compared to the peak. And because Markham sits right in that East GTA story, let's go there next. Doing the same thing, we'll keep it tight and use 2 sales on the same street in Unionville. This one checks a lot of premium boxes. 60 by 127 foot south-facing lot, 4+1 bedrooms, 5 bathrooms, and a 2-story detached home of approximately 3,000 to 3,500 square feet. A grand open to above foyer with skylight and solid oak staircase, a gourmet kitchen with center island, built-in appliances, and quartz slab backsplash, plus a finished walkout basement with a 3-piece bath, large rec room area, and an extra bedroom. It was listed for $2,358,000, sold for $2,808,000, and that happened in just 7 days. A renovated home using the same classic under-list strategy at the peak. This one is an executive 2-story detached home on a 60-foot lot with an in-ground pool, finished basement with second kitchen, in-law setup, updated gourmet kitchen, and landscaped backyard. Size-wise, it's approximately 3,200 square feet plus a 1,400 square foot lower level. It sold for just over $2 million in just 5 days, which is quick for 2025 and speaks to how well prepared homes can still move. The price drop from 2.8 mil to just over $2 million is a change of about $738,000, or roughly 26.3%. Comparing to the Door Insight graphic, Markham detached shows a drop of 24.7%, which is on point. The listings that we looked at are a touch steeper at 26%, but it's broadly in the same ballpark. And someone else pushed back with, go and try to buy a detached home in Oakville if you think homes aren't holding value. Alright, challenge accepted. Let's put that Oakville pushback to the test using 2 sales on the same street in the Glen Abbey community. This property sold during the peak in 2022, 4-bed, 3-bath, 2-story detached home, approximately 2,500 to 3,000 square feet on a 56 by 118 foot lot. Inside you've got a redesigned contemporary kitchen with an oversized island and stainless steel appliances. Bright, spacious principal rooms. They listed low at 1.899, sold for 2.157 just after 8 days. So the same thing again, classic peak era under list and over ask dynamic. In the summer of 2025 on the same street, a 4-bed executive 2-story home, approximately 2,500 to 3,000 square feet on a 51 by 120 foot lot with an updated kitchen, granite counters, stainless steel appliances, appliances, and a main floor office, family room with wood burning fireplace and walkout to deck, and a finished basement with a second kitchen, listed at 1.649, sold for 1.56 after 55 days. So on the same street, the price change was from 2.157 to 1.56 for a total drop of $597,000. That's a 27.7% difference. Door Insight points out that Oakville detached market shows about a 24% drop. Our same street comparison is a bit steeper at a drop of about 27.7%, but broadly in the same range. The tempo shift is loud and clear too. 8 days on market at the peak versus 55 days on market right now. The 2025 home has a finished basement, so the lower price despite more finished space tells you how much today's rates and buyer leverage are doing the talking. So to go back to that comment about detached homes in Oakville holding value, might be true, but isn't true all around. Current housing supply is higher than in 2022, and the average days on market is elevated across most 905 pockets. And the sales to new listings ratio has cooled toward balanced or even buyer territory. Mortgage rates are still far above the 2021 lows, so affordability is being decided by monthly payment math more than listing prices. So the net effect is this: buyers have time, condition clauses are back, and relists and price cuts are common when homes overshoot. Remember that one comment asking compare it to 2019, and what does that look like? Quick reality check: in August 2019, GTA detached home prices averaged about $976. Today they're around $1.3. We're below the post-peak correction level. In August 2022, the average was about $1.38 million, while the peak in March 2022 hit $1,697,000. So what's this mean? We're still above 2019, but now below August 2022 and far under the peak. A clean view of the market's reset. Hope this gave you some clarity. If you gained value, subscribe. Thanks again for watching, and I'll see you in the next one.